And so if we look at the recent price movement, it was right here, and then it went down quite a bit. So clearly people feel like, the attention that this news event got is probably not good for the company long term. If we look at the long-term history of the price, look at that. These are the long-term returns of private healthcare in America. The way the business works is they are the UnitedHealth Group. So there's the UnitedHealth proper, the original insurance company. They had a merger in 2012 with Optum. The group also has subsidiary businesses under Optum. They have a provider business, technology solutions one, and then they have a pharmacy. It's a mixture of an insurance and non-insurance business. There's like a CEO for each of those subsidiary businesses. It was the CEO of the insurance business specifically that was assassinated in New York. The CEO of the entire group was not. So it also says something that the insurance was targeted. If we look at where UnitedHealth has been over the last decade, and I've got annual results, it's consistent revenue growth from 2014 to 2023. So this is revenue growth right here. And this is the market share. It was higher in 2014, it's lower in 2022, but both times they were the leader. The market share isn't changing too much. And this is, again, just commercial. More of the growth was in the Medicare and retirement markets and the community and state markets. Each of these basically tripled in their revenue. When we look at how much that revenue is growing, a lot of it had to do with the fact that they penetrated these markets. The story of their growth isn't just one of insurance. We see that they're non-insurance businesses, so the different services, products they sell, these grew by several multiples. A disproportionate share of the revenue growth came from the non-insurance business. Their earnings actually did much better than the revenue growth. 2014, it's about 5.6 billion, gets to almost 22.4 billion. So, we're looking at about 4x in earnings for what was less than a 3x in revenue. And there's a few things that explain this. One is that if we look at their operating margins better. So every time they grow revenue here, they make more money because the revenue is higher. UnitedHealthcare, their margin has been pretty consistent. It looks like 5.8 to 5.8. If we look at Optum overall, 6.9 to 7. The operating margins are pretty consistent over time. As this became a larger share Optum of the revenue, we see that the overall operating margin improves, which means that earnings grow faster than revenues. If we go back to revenue real quick, right? This alone is pretty impressive. There aren't very many companies that make over $100 billion in revenue even today. To get to almost $400 billion and have that kind of earnings growth is impressive. We look here about exactly what they do with these earnings. Blue bar represents buybacks, green bar represents dividends. Well, as the earnings steadily grew, the dividend distribution steadily grew. Most companies like to have a pretty consistent dividend policy, whereas the buybacks have been more of a fluctuation. Some years they're doing more M&A, and that they spend cash on acquiring new businesses and adding it to either UnitedHealthcare or Optum, they're going to spend less on buybacks that year. So we see a slight majority of the earnings toward buybacks and dividends. However great the business is, if we go back to what the revenue is, right? I say there aren't very many companies that make over $100 billion in revenue. There certainly aren't many that make over $300 billion in revenue. UnitedHealth is the 8th largest company. Talk about American companies. It's 1, 2, 3, 4. It's the 5th largest, right? So this is the nature of being so big, is that it's easy to have a target on its phone. That is the challenge, is the larger a business grows, as you expand into the size of the economy, there's less for you to capture. And so your ability to grow is going to depend a lot more on what economic growth rates are and, whatever else you can find to be a new revenue opportunity. And that gets hard to do. You can't just maximize what you were already doing when you were a small cap. You have to create brand new thing. If we look at what that earnings growth rate was, I don't know if we could realistically expect a 4x of the earnings again. If we assume that there's still more room to grow their non-insurance business, earnings growth more in the upper single digit range seems likely. And I think you also have to weigh some of the long-term risks. The Biden administration sued to prevent UNH's acquisition of a senior home and hospice care business. I think UnitedHealth's attempt to acquire such a business reflects the exact kind of novel M&A they would want to do to broaden their ecosystem. Attorney General Merrick Garland, characterized it as the Justice Department will not hesitate to check unlawful consolidation and monopolization in the healthcare market that threatens to harm vulnerable patients, their families, and healthcare workers. This represents some of the organic hesitance to allow companies like UnitedHealth to grow more. So the news event kind of is a cartoonish way to shed light on it. But there's a lot of controversy in this industry. And I think every company has political and regulatory risks. I think there was much more pressure. In their most recent financial report, UnitedHealth reported $299 billion in assets. $106 billion of that is goodwill. So the goodwill is the premium they pay to book value of the companies they acquire. So that reflects just how much they like to engage in M&A to grow. If they're getting resistance to this, that hurts the growth assumptions. With Robert F. Kennedy Jr. going to be heading the Department of Health and Human Services, now that could be good or bad. It's really hard to say because on one hand, he's made it very clear he wants to go after big pharma, get rid of chronic illnesses that create new sales opportunities. One benefit here is that it reduces costs of medication, and so that can be more business opportunities for UnitedHealth because the higher the costs, the more that will strain their margins and also just deter sales because they have to price some of that in themselves. So reducing costs can be good for them, but also if he bans a lot of medication, that could also make it harder for them to have as many product sales. For folks hoping to get a good return on a stock like UNH, they need to make sure that the price reflects the more modest case scenario so that they can get the upside for free. Right now, I think UNH is priced for the upside. Right now, the forward PE ratio is about 21, 22. Management has been guiding for 13 to 16% long-term earnings growth. I would want a PE ratio of 10. I wouldn't want basically the price to be about half of what it is now. And this is a mega cap that has, a lot of people shooting at dirty looks, as was recently manifested through the assassination. So